Ever heard of crypto traders making money whether the market is going up or the market is going down? It sounds like magic to some persons because people are buying to hold for a long time, but in crypto, you can predict the opposite directions, and that is called futures trading. So let me break it down in a few minutes. Now, with crypto futures, you're not actually buying any coin like Bitcoin or Ethereum. You're only betting where the price is going in the future. Now, do you think the price is going up? You can long the market. If you think the market is going down, you can also short the market. But here is the interesting part. You can as well use leverage to even trade. Say you have $100. You can borrow more money to add to your $100 to trade, but it's risky. It means the higher the leverage, the higher the reward and the losses. Let's take for instance, I have $100 and I am longing or shorting the market with 10x. It means that I am 10xing my $100. That means it's going to be 100 multiplied by 10, $1,000. That is what it means. Meaning I'm entering the market with $1,000. So if that $1,000 does 10%, means I've earned my $100. And if it does 100% liquidation, I've lost my $100. Now, if it does 20%, I've also made $200. But a situation the market does negative 10%, I've lost my $100. And this brings us to what we call liquidation. So liquidation is a price set and tagged for every entry you make in a future market. If you enter a coin right now, let's say Bitcoin is 104,000 and you're longing it to 110,000. Your price, depending on your leverage, could be 94, 95 or $88,000. And anything that makes Bitcoin to reverse and hit any of those prices, you've lost your money. So this is the bad side of futures trading. But for those of you that knows how to analyze the market and how to use your stop loss, then you are going to make crazy money from this, because people that have been using the signal we are calling our Telegram channel here are already making crazy profit. We're not even wasting much of your time. Let me take you to the tutorial part. Let me show you how you can use the futures market to make crazy money and trade like a pro. So to get started, you need to have an account with Weex Exchange. And in case you do not have an account, I've done a video previously explaining how you can set up your account. So go and watch the video, set up your account, and don't forget to use the referral code here, because with this referral code, you're eligible to get 300 of their token for free. And that one, you can trade it or you can leave it. And if the token is $1, you are good to go. So let's get straight to how you can start trading the futures market. So when you come to the exchange here, you're going to see that my futures balance is 0, right? So you have to transfer from spot to futures. When you make a deposit first on this exchange, it's going to go straight to your spot. And that is if you want to trade on spot. I've done the video too. You can go and trade there. Trading futures is entirely different. So for you to trade on spot, you have to click on this transfer. And then you transfer from spot to futures. You see, is on futures. So I click on these two swap button here. And even when you are done trading on futures, you want to make a withdrawal. You can't withdraw from futures. You also have to come back, transfer from futures back to spot. So let's go back to futures. And then you say you put, okay, $7 is here. And then I put the $7 and then I click confirm. The money automatically comes to these futures. Remember when I say that I only fund money only when I want to trade, and once I'm done, I remove my money. So the money is now in futures. So you come below here and you see futures, tap on it. Once you tap on it, here is the futures market. So up here is cross margin and here is 20x. Why the market you want to choose here is Loom USDT, which is the one available. And if you check, is on perpetual contract, like I explained previously. With this one is indefinite except you hit your liquidation price. So if you always want to change or want to choose a different pairs, always come here and then choose the pairs you want to. Make sure it's on futures. So say you want to trade XRP, is on futures and is on spot. So you click on XRP here. You have choose. Now cross margin and isolated margin. Now let me explain the both. Now cross margin is a situation where if I've entered a trade with $3 right now, or maybe I entered a trade with $300 and I have a balance of $700, What it means is that once my $300 is exhausted, the price I've gotten to liquidating my $300, the exchange will go back and start taking money from my $700. But when I put it on isolated, it means that it's not going to go beyond the $300 that I have selected. And then the combine here means in case you want to enter in tranches. I taught us risk management techniques and I mentioned entering trade in tranches. Say you want to enter trade in tranches in different support zones and maybe you choose first entries, choose second entry. What the combine does here is that once you've entered the first one, say you want to enter BTC now at 100K and then maybe 98K and second one at 100K. If you enter those two different positions, it's going to combine them and give you an average price. That is why you're seeing this combine. So you're going to leave it in isolated and then you're going to see open and you're going to see close. Now, open is that you are trading an open market like you want to long, and the close is that you want to short the market. And then when you click on open, you're going to see open long and open short. The open short means that you are selling and then open long means that you are buying. And when you click on close, the close long means that you are shorting the market is going down, and close short means that you are closing the market to take profit or your loss. And then when you come to this place, this order, you're going to see market order, limit order, and trigger. Now, I've explained the market order on sports trade. So market order is that order that allows you to trade at that particular market price. Like it's going to fill for you. If this market is trading at 2.482 right now, the market will automatically fill for you at this price instantly. Even if you clear this order, it's going to go to the next buy area and start buying again for you. And then when you go to limit order gives you the opportunities to choose a price for yourself. It doesn't just go here and start filling orders for you. And then when you go to trigger, this is market. You see here is closed. And then when it comes to trigger here, now trigger is your stop loss, just like you see in other exchanges. Now, let's say you have choose to enter this trade right now at 2.476. Let me just enter and show you. Let's say you choose 2.476, right? This is your entry. And you are not sure if the market will continue going up and you want to set your stop loss, which is very important. That is the number one risk management in trading. So you want to set it. All you need to do is to come here after the market has triggered. You can come here and choose, maybe you want to set it at 2350. Right now, you're going to come and choose either market or limits. It means when you choose market, it means that you are instructing the exchange to make sure they close this trade instantly. The market gets to this place, 2.350. And then when you choose limits, it means that you have option to choose another price where you can say 2.300. Now, what it means is that you've instructed this exchange that the moment the price gets to 2.350, it should set to sell for you at 2.300. That is a limit order. But for me, there's no point of doing this. Why not keep it on mark? So immediately it gets to that place, it sets for you and sell for you instantly. So let's take some practical steps on how to trade, and I'll show us how to do the calculation on the market so you know the leverage and all that. Now, let's say I want to buy XRP, right? I'll click on open and I click on limit. I want to choose a price for myself. I can choose to buy as 2.4654, right? And then I want to buy with half of my money. The market has already gone below this. Let's just go down again. They say 230, right? And then choose 50% and I'll click on open. It means I am longing the market. You can see the full details of the market. Now, it means that I am choosing SRP and then my price is limit. And the amount I'm using is 77 because my leverage here is 20x. 20x meaning I'm doing 20 times of the money I want to use. So I can also increase my leverage up to 300. I can reduce to 10. So I do advise we do 10 because 10 is safer and lower. But some people do up to 300. So I can do 10, right? Here is 10 because if I want to trade, I trade with at least $1,000. So I choose 10 because I'm not targeting too much and it reduces my liquidation price. So I click on confirm. Now, you see, it has changed to 10x. Now, let's say I want to buy at 40 right now, or 45. Let's put that 45 so you can trigger for the market is so fast, but let's just keep it at 40. right? And I'm using 50% of my money to buy, which is $3.45. And then my liquidation price is, if this market gets to 1.959, it's going to close and I will lose my money. So, and I am longing the market. That's why I click on open. So I'll click here. Now you're going to see it on open and it has filled for me instantly. So now when it fills for you, come down here. You're going to see, oh, I used cross instead of isolated anyways. So let's go down. Now you're going to see the details of your trade. You see long, mean that I predict the market is going up. Cross margin combined, and I'm doing 10x. Now unrealized profit PNL, you're going to see I'm currently at plus this amount you're seeing here, and the profit ratio is 1% currently. And the total of SRP I used is 10, and the margin I used is $2. And then the average entry I did is 2.4640, and the current price you are seeing here, and my liquidation price is this 1.7680. Now, this is how you can trade the market. Now, if I want to set my take profit and my stop loss, I can click on this TPSL, I mean take profit, stop loss. If I want to close this market right now, just now I click on close. If I want to reverse the trade, what it means that I want to reverse it back to opposite of what I've done now. So let's check on take profits. Now, if you see take profit here, I can choose that I want to take profit the moment the market gets to 2.5. And if market gets to 2.5, it's going to be 14% for me. And then what will be my stop loss? I can choose stop loss to be 2.35. 2.35. And you see, I'll be losing 46%, and that is wrong for a trader. So it's going to be 2.4, maybe 2.0. This is 17%. So it's going to be by your risk appetite anyways. This is 13%, so you can do it 3.3, and this is 2%. Remember, the market can easily come down and push you out. So always check the market very well before entry. This is just me showing you how you can do it. And once I click on confirm, whichever one that comes first is going to happen for me. And here is it. Click on trigger. That is the trigger stop loss. Now, whichever one that comes first for me, instantly is going to trigger for me and close the trade. If I also want to cancel it, I can click here, not cancel, or if I can click on cancel all, I'll cancel both the position and the order that has not triggered. But if I'm here on trigger already, I can just click on cancel, and it will cancel for me. And I'll go back to see this one. See, right now I'm already running on loss. So if I want to close this trade right now, I can just come down here without wasting time. Since I'm not setting my TP and my SL, I can just click on close, and I mark this to the end and I click close. It has successfully closed for me at a loss. So this is how you can trade this. Now, let's say I want to short this market. It's still the same strategy, right? I can choose to say I'm buying it and C00, and I'm using 50% of my money, and I'll click on shorts here. It says other position is minimum of 10x. So I have to increase my money because I do not have enough. I can always check my leverage. Make sure you check all these things before you start. And I click on here. It's still not up to, the minimum you can buy is 10 extra rupees. So it's not up to 10 extra rupees. So I cannot enter the trade. So, but this is how you can actually trade these markets. So position is the one that is already currently running. Open order is the one that has not triggered, and copy trade is different. When you click here, you're going to see a trade history. Like here, this is the trade history that I just did. This is the long and this is the short. And this is the PNL that is here. This minus 0.0270. It means that I lost money. So with this now, you can trade the futures market on this particular exchange profitably by using the signal that we're giving in our channel. And if you also want to learn more on how to analyze the market, all you just need to do is to hit subscription button right now. Hit it. Yeah. Then turn the bell notification button and then comment ready. And I'll be making more videos, tutorial videos on how you can navigate this market and become a profitable trader. But if you enjoyed this particular video, you learned something, make sure to give me a follow. See you again in my next video.